like I said, we'll be covering market structure today. Everything we need to know about structure. And I
Yes, sir.
said structure is the foundation of this strategy. If you want to understand this concept and trade it the fullest, you need to understand structure, how to read structure. And when you understand structure, you know the trend. Just like they said, the trend is your friend. And I believe you've been able to watch the videos on structure. So after watching the videos, were you able to understand anything?
Yes.
What and what were you able to understand?
So I understood how to identify breakup structure.
Is that all?
Also, I also understood how to identify change of character.
Okay, it's actually nice, but let me do some
And
breakdown right now. Now, when we talk about structure, I said we have two major structures. Firstly, we have a bullish structure, something like this. And secondly, we have what we call a bearish structure. So for a bullish structure, the one I have by the left, a bullish structure means that price is in an uptrend, right? It means that price is trending up. And what are you going
yes,
to do when price is trending up? The best thing to do when price is trending up is to do what? Is to buy. And another thing I said is we have a downtrend.
yes,
Price is dropping lower. So what you have to do when price is dropping lower is to sell. Now, how do you understand
yes,
and be sure that price is actually in an uptrend or in a downtrend? That is when break of structures comes into play. So when price is trending, we usually
yes,
see break of structures. So price breaking structures above the high. And I said something about understanding your high. This particular high right here is what we call a higher high. Okay? So what does this mean? This simply means that price is trending up. So I hope that is understandable. When price breaks above a high, this is a higher high. We have a pullback. Price moves above the high, breaking above this high. So when price breaks this high, what is our expectation? We have expectation that we're going to have a pullback. So once price breaks above your higher high, you have an expectation that we're going to have a pullback. And after the pullback, we anticipate another higher high, right? We expect that price is going to break another higher high. And after the break of the higher high, what are we going to expect again? Another pullback that we move to the upside and break the next higher high. The question I'm expecting you to ask me is, how do we know that price is going to break the higher high? Why do price break higher highs when we are in an uptrend? Price break higher highs when we are not uptrend because the lows are protected. This low right now is a protected low. This low is protected and this low is protected. So even if we have another pullback, the expectation is that the pullback won't break underneath this low. If the pullback breaks underneath that particular low, it means that we start anticipating a possible reversal to the downside. That is when we start anticipating that price will break to the downside. So if price continues higher, it means that the high has been broken. So this new low is now protected and we don't expect price to drop lower. If price breaks underneath this low, it means that we have a shift in market structure. I hope you understand that part. So that is when we start anticipating that
yes,
price will start dropping to the downside. So I hope this particular explanation makes sense to you. Okay, so let me do
yes.
example for the bearish market. So in a bearish market, we usually see market reacting something like this. So what you basically see in here is that this is a lower low, price pulls back, form a lower high, and continues to the downside by breaking structure right here. Now, when price broke structure to the downside, the expectation is that we're going to have a pullback. And during this pullback, we don't expect it to get to the lower high. If it gets to the lower high, it's a shift in structure, or we call it a change of character. So after we had this pullback, price continues to the downside, break structure again, and we have a pullback and a continuation to the downside. Now, I said something about internal structure. Now, one thing you notice is that that particular drawing I do there is actually very different from what you see in the market, because what you see in the market will be a little bit confusing. When you visit the market, you might see price print a high. We might have a pullback. Before price breaks this higher high, price might play a lot inside this range. You might see some price actions like this inside the range before the continuation, right? You might have this pullback, price plays a lot, maybe gets to the low and continue. So this is what you are likely going to see in the market. So if you see a structure like this, it might be a little bit difficult to read the structure. So what I needed to focus on right now, if you want to read this structure, is your swing points. Because if you look at it, this is that same higher high, right? This is the same higher high. Price now pulls back, forms a higher low. Now forget about all the play you
Yeah.
have inside this particular range. You don't just mark the high of the range and the low of the range. So everything price is doing inside here is just an internal structure. So when you mark the high and the low of the range, all you have to do is to wait for the moment price will break above this high. So when price breaks this high, it has confirmed that we are in an uptrend. Hope you see that. So when price breaks that particular high
Yes.
is where you try to mark your next price range. So where is your new price range? You see, price broke structure above the previous high. So your new price range is this particular low we have right here. You see, this particular low right here is your price range because it's from this low that price moved to the upside to break structure.
Oh,
So that low right there is your new range, and all you have to do is to mark the lowest point. The lowest point is actually the range, and the highest point we have right here, which has confirmed is high. So after the pullback, you see price pulled back, playing around. You see, this was actually price forming this right now, formed the low, moves to the upside. So if you want to know your recent high right now, all you have to do is to mark the low of this range and mark the high. So anything price does inside here doesn't really matter as long as it doesn't break underneath this low. I hope you get me. So if price likes, let it play around. All you have to wait is when price breaks this high. If price breaks the high, you know that you are in an uptrend. But in a case where price doesn't break above the high, instead it's moved lower, something like this, it plays around and moves lower. That's when you know that you have a shift in structure. Then if it continues, we are still in an uptrend. So during the explanation, what I said is for a break of structure, price offers a continuation of an existing trend. We only see break of structures when price continues in an existing trend, but we see a change in market structure when price is shifting in its trend. I hope you understand those parts, right? Let's continue. So what I would want us to do right now, you can see my screen, right?
yes.
So what I want us to do right now is try to read the structure together. Let's do it on a price chart, okay? So this is GBP card in case you want to do your own personal back test. GBP card, this is the 2 hours time frame. As you can see right here, this is the 2 hours time frame. The pair is GBP card. So let's try to read the structure of GBP card. Let's start from this particular area right here. But before that, let me introduce our mentorship. So our advanced smart money mentorship is still running. I'm going to show you some of our students who were able to get funded trading these are concepts. So if you're still asking me if you can pass your Profem challenge to be a funded trader, I'm assuring you that if you apply this concept effectively, you're going to get funded as a trader. So if you join our mentorship, you're going to have access to advanced smart money course, which is going to break everything you need to understand about smart money concepts into simple terms. Weekly chart breakdown, we come live to break charts down. You're going to be part of our VIP support community, premium possible setups, and weekly Zoom meetings. This mentorship costs $216 for now. So let's visit our VIP community. So these are VIP community, and from what you can see, you can clearly see that everyone is currently typing congrats. And why do we have this? One of our students recently passed his funded challenge, and this is his certificate. And this particular challenge was passed on the 5th of this month, and I'm currently recording this video on the 7th. So this is another student who got his first payout trading these concepts. From what you can see, he said, thanks very much, Born to Trade family. So this is to tell you that I'm not running the mentorship alone. I'm running it with every single person in the community who contributes. I can't even do it alone. This is a general community where we have advanced and beginner traders putting heads together to achieve things in the market. As a matter of fact, I think during my last lesson or last two lessons, I shared those screenshots where he got funded, and I think it's been 2 weeks. He already got his first payout. So you can as well try to check out that particular lesson. And we have more. And this is another trader. This is Mr. Hills. From what you can clearly see, he got funded as well. This was on the third day of this month as well. It got funded. And this is it. You need to understand that this strategy works. If you need community of traders where you can put heads together to analyze and trade in the financial markets, we are here for you. We have traders in our community who are going to help you. If you need my personal guidance, once you enroll, you're going to have access to that. And these are all you're going to get from the mentorship. And if you want to see some reviews from our students, you can visit our website and try to read up. If you want to test me privately, hit the WhatsApp link right here and you can test me privately. Let's go back to the lesson. So let me try to zoom in right now. So from here, what you can clearly see is that price moved to the downside. I hope you can see that price moved from this high to the downside, and over here we had a pullback and the continuation to the downside. So what are you going to mark? This is a break of structure to the downside. So after we had that break of structure
Yeah.
to the downside, you see we had a pullback again and price breaks structure to the downside. So what does it mean? We have another break of structure to the downside. This simply means that price is what's in a downtrend. We can call it a downtrend or a
Yes.
bearish market. So price is in a downtrend. And after that, you see, we had another pullback and another break of structure to the downside. So this is another break of structure. Now, when I was actually explaining how to map out structure, I said when I consider a pair as a valid break of structure is when price does what? Close with full candle, right? When the body of candle closes underneath the previous low. Now take a look at this particular place. You know, this particular area, I'm not going to consider this as a break of structure. Can you tell me why? This particular high is not a break of structure.
For the week.
Yeah, we have a wick right there instead of a full body candle.
Yeah.
I hope you understand
Full
that.
body candle.
Yes, so that is how you identify it. If it's a wick, those ones we call it a liquidity sweep. It's not a valid break of structure. So right now we have two candle pullback and price equally broke another structure to the downside. So you see, this is actually a trend right now. You see, we've had series of trend right now because we have series of break of structures to the downside, which means that the trend is bearish. Now, at this particular point, we had a shift in structure because this was actually the last pullback before the break of this low. So price moving above this particular high is what we call what? A shift in market structure. So if you see someone calling it change of character, just know that it means the same thing. Change of character means that the character of price is shifting from bearish to bullish right now. So from this particular point, we start anticipating what? Bullish movements. So price moves
Bullish
to
movement.
the upside, you see, from this low now, from this particular low now, price moves to the upside, and this is where we had what? The pullback. So after the pullback, you see price moves higher again and breaks structure. So all you have to do is to
Break
mark the
structure.
and identify it as your break of structure. So what I was saying then is, if you are able to understand markets like this, believe me, 50% of your problems is solved because you already know the direction of the market. I hope you see that. Since you see
Yeah.
that, okay, market structure shifts, price is breaking structure to the upside, you already know that all you have to do now is to do what? Is to buy because price is what? Price is bullish. So these concepts are actually very, very simple, but I don't know why some people find it hard to understand. So we had this pullback. This is actually the low before price starts moving to the upside. So let's see if we have a break. So at this particular point, you see price moves above this high. Now, this is a valid break of structure, which also confirmed that price is still in an uptrend. And now we had another pullback. And you see, these lows are protected. This low is a protected low. Until price breaks underneath this low, there is no shift in structure. So price pulls back, continues to the upside. So let's try to mark it again. Another break of structure. And over here, we had two candle pullback. Okay, we have one, two. The black candles, the two, they are bearish candles. They pulled back and price continues again,
Yes.
and it's a valid break of structure. It indicates that we are still in an uptrend. Now, some people don't usually consider this two candle pullbacks. They like seeing a complex pullback, just like the one we have over here. Some people don't consider the two candles, but sometimes, depending on the scenario, I might look to consider that. Now, at this particular point, what you can see after the pullback, price prints another high, pulled back again. So after the pullback, we were expecting a higher high to be formed, but just like we said, this is not a valid break of structure because price wicked and pulled back. So where we had the valid break was from this low till this particular high we have over here. So if you want to mark your break of structure, you just have to mark it from this high, extend, don't mind the wick, extend till where you have candle body. So this is where we had a candle body. Don't look at the wick. This is where the candle body closed above this previous high. So it's a valid break of structure. Then after that, what we see is that we had another pullback. So this is actually a break of structure, but in this case, there is what we call supply and demand. So after the structure lessons, we talk about supply and demand because there are some scenarios where you see a market structure shift, but it's not totally considered as a market structure shift because of where price is moving to. So when we talk about supply and demand and liquidity, you will understand those concepts. But let's just focus on structure. So over here, price pulled back. Here could be considered as a shift in structure. What we see immediately after the pullback, here being a complex pullback, price continued to the upside, and we have another break of structure around this particular area, which just confirmed that price is still in an uptrend. Over here, we had a pullback again and a continuation. So these ones are very clear. A break of structure, we are in an uptrend. So all you have to do is to be buying because price is in an uptrend. Now we have another pullback again, and you see price continues again, continuing to the upside. An uptrend, you see massive move. Now we have another pullback and a continuation. So understanding this now has not helped you to understand that price does not move in one direction. So if I try to zoom out, you're going to see how price moves
Yes.
from a bearish market. Let me try to identify the breaks of structures we had underneath the low. So you see, it means that price does not move in one direction. Price will always move from a bearish market to a bullish market. And at some point, we're going to have a shift and a bearish market, and we have another continuation of the bullish market. Okay, I hope this makes sense to you. So this is price continuing in an uptrend. Over here, we had a pullback. You see, after price formed this low, pushed to the upside, here is where we had the pullback and the continuation. Now, here was not identified as a valid break of structure. Why? It was a spike. So price had another complex pullback before breaking above the high. So this is now a valid break of structure, and price continues that way. We have a single candle pullback, which I'm not going to consider now, but you see price prints this high again. We have a pullback, a break of structure again. Now from this low, price moves again. You see price played inside this range. So I said for you to be able to understand your price range, all you have to do is to mark your low of the range and the high of the range. So when you mark it this way, anything price is doing inside this range does not really matter to you. You are just waiting for two scenarios. Either price moves above this high or breaks underneath this low. If it breaks underneath this low, is a shift in structure, but if it breaks above this high, is a trend continuation. So over here, price breaks to high, which has now confirmed that we are still in an uptrend. I hope you understand that. Now, after that, we had another pullback again,
Yes.
which confirms that we are in an uptrend. Over here, another pullback, which confirms that price is in an uptrend. So let's read it. You see, this particular low right here formed this high. This was the pullback, formed this low, formed this high. This was the low, and price moved higher to form another higher high. Now, after the higher high was formed, what were we able to see? This is where we see price slowing down a little again. I said you should mark the low of your range and what the high of your range. Now, all you have to do is just to wait. If price breaks above this high, trend continuation. If price breaks underneath the low, a shift in structure. Now, if I try to extend, you see price breaks underneath this low.
Okay.
Now, what does it mean? It means that the trend of the market is actually shifting at this particular area. So from there, what we expect is that price starts dropping to the downside. And if I try to zoom out, what can you see? The trend of market shifted from there, and we start having a push to the downside. So I hope you understand exactly what I just explained about the trend, bullish trend,
Yes.
bearish trend. So do you have any question about the trend?
Just that at times when it becomes so complex, at times I find it difficult.
Yes, it's normal. It gets difficult because
Which
I feel like
you said it all again that when it becomes complex, especially when you mark the high and the low,
yeah,
any under one in between, like internal
internal.
structure.
Yes,
So it's from there go to I always mark the high and I mark the low. So I now take the any other movement in between as an external.
structure. But when you get advanced, you still know that we still trade that internal structure. Now, have you watched the lesson on multi-time frame structure? Have you?
Yes.
Okay. So if you've watched
Yes, I watched. I
lesson,
watched
that
already.
lesson is going to help you understand what price is doing. Now, let me explain that in multi-time frame structure. Now, this is the 2 hours time frame. If we go to something like the daily time frame, we see something different. I hope you know.
Yes.
Now, let me try to mark this.
Can I ask one question?
Yes, you can.
What can I ask one question?
Yes.
What is the time, the hourly time that is best in trading or
Yeah,
analysis?
I will tell you there is.
Is it
Yeah, I'm listening.
is it 1 hour, 4 hour, 30 minutes, 15 minutes, 5 minutes? I don't know. So
Yeah, a lot of people ask this question, but I always give them the same answer. I tell them that there is no best time frame. All the time frames works. The only thing you need is just to know the time frame that works best for you. So when you're practicing, that is when you know, okay, I understand this time frame very well. This time frame works well for me. So if you've been watching me, I usually use the 2 hours time frame. And currently now I'm teaching you, I'm still on the 2 hours time frame because I understand the 2 hours time frame very, very well. And as an intraday trader, the 2 hours time frame works well for me as well. So for different trading styles, we have 3 major or 4 major trading styles. The scalpers, they trade very fast, so they need lower time frames. We have the intraday traders, which are people like me. I trade between days, so I use the medium time frame, which are the 2 hours, 1 hour. Sometimes you see me using the 4 hours time frame. We have the swing traders. The swing traders hold trade for weeks. So you see them using the daily time frame or even the weekly time frame because they hold trade for weeks. I hope you understand. Now we have the position traders. The position traders can hold their positions for years and for months. So since it works that way, you decide the type of trader you want to be. If you want to be a swing trader, a scalper, or a day trader. So knowing that can help you know the time frame. But as for these concepts, they works on all time frames. So let me show you what multi-time frame structure
okay.
means and how we can make use of those internal structure because sometimes I take trades based on what price is doing in the internal structure. So at this particular point, let's say this is now what price is doing on the 2 hours time frame. You see, this is the 2 hours time frame. And the 2 hours time frame, what are we seeing? Price is trending. We had a shift, right? So after the
Yeah.
shift, price
Yeah.
started to trend lower, and after that, we had another shift
Yeah.
because this is the way price moves, right? This is the way price moves.
Yeah.
So, do you know that this particular trend we have on the 2 hours time frame, do you know that if you go to the higher time frame, this will immediately turn into what? Into an internal structure. It will turn into a minor structure.
Yes.
Yes,
That's
this
what you explained on the video.
Yes, so this is it right here. On the higher time frame, you're likely going to see something like this, where price moves. This is a pullback, and this is price continuing on the higher time frame. So let me do it with a different color. So on the higher time frame, you're likely going to see this red color right there, but on the lower time frame,
Yes.
actually a trend. So what it means is one leg of price on the higher time frame is a trend on the lower time frame. So this pullback you are seeing on the higher time frame is a trend on the lower time frame, and this continuation is actually a trend on the higher time frame. So let's use this particular one, this particular example right here. I don't know, but let's try to use it. So this is what we have on the lower time frame. Let me do a quick sketch of what we had on the lower time frame. So this is what we had. Well, this is actually going to look very dirty, but let me try to mark what the trend will look on the higher time frame instead. So let's say on the higher time frame, we're going to have this low. Since price is trending over here and it's got to this high, right? Because it got to this high and continued. Let me try to zoom out. So it got to this high and continued. So this is going to be the high. And after that, we're actually going to get a pullback because we started seeing some pullbacks around here. So this is what price is going to look like on the higher time frame. But let's see the daily time frame and confirm. So I hope you can clearly see it. This is exactly what we are seeing on the higher time frame. You see, the higher time frame pulled back. This is the pullback on the higher time frame. This is the move, one leg of price, and you see it's a pullback. So it happens from time frames to time frame. What you are seeing on the higher time frame is an internal structure for a higher time frame. Now that we are actually doing this analysis on the 2 hours time frame, do you know that if we drop to a more lower time frame, like the 15 minutes time frame, the 15-minute structure is actually going to be an internal structure for the 2-hour structure because you're actually going to see more complex structure. So let me do it here right now. So you see, this is actually the 2-hour structure. Let me zoom in from the area we had a shift in structure. Let me delete the red line. So we are on the 15 minutes time frame currently. So when we were looking at this on the 2 hours time frame, what we see is that we had a shift in structure right here on the 2 hours time frame. And after the shift in structure, what price did is that it moved higher, had a pullback because this was one leg of price on the 2 hours. But if you try to mark this same structure on the 15 minutes time frame, let me use the red color so you see what
We
price is.
have another change of
We have another trend right here. I hope you can see it. We have another trend inside
Yes.
the 2 hours trend. I hope you can clearly see that trend we have over here.
Yeah.
So this is how
Yes.
markets
Yes.
move.
Yes.
So it's actually very important to understand price across all time frames. It's important to do that and note that the higher time frame trend is stronger than the lower time frame trend, just like this trend we are seeing on the lower time frame. This trend is weaker, right? The trend on the 15 minutes time frame is weaker, but the one we had on the 2 hours time frame is actually stronger. And another thing you have to note is if you compare the 2 hours trend to the one we have on the daily time frame, the trend on the daily time frame is actually stronger than the one we had on the 2 hours time frame. So I hope this makes sense to you. So that's just the most important thing, understanding the trend and knowing how to take advantage of it. So I don't know. This is just a brief explanation of the topic on trend. So Solomon Wisdom. See you in the next one.